Great panel. Big round of applause. Let's do a quick introduction.
Hi, I'm Eran from Shopin. You know everything about me, I guess, because I've been up here flapping my gums earlier on. But we're building a decentralized Amazon on the blockchain, just completed a successful token generation event, raised just over $42 million, and out in the market, raising an actual convertible debt/equity round, very traditionally.
Hi, I'm Justin Newton. I'm the founder and CEO of Netki. It's my 8th startup over like 25 years. We've actually done kind of traditional equity raises and fundraising. However, because the services we provide are around KYC and AML, we've also been involved in a dozen or more token sales and ICOs, so we've been pretty close to that space.
Hi, my name is Enzo Villani. I am the MD for Transform Group. We've helped launch about 30% of the actual crypto market cap. I also am a kind of active investor. We are also building a ATS, which has been built already. It's called actually DBOT ATS. I'm chairman of the advisory board there, and that's going to be for actually kind of security tokens. And I'm the former MD of strategy of NASDAQ, so I'm from the actual capital markets.
Hi, my name is Jason White. I am at what we believe is the world's first crowdfunding platform, Indiegogo. I oversee 2 businesses there. One of them is equity crowdfunding, helping companies offer and sell registered and exempted securities to the crowd for fundraising purposes. And the other platform I oversee is token sales, so conducting both utility token sales, security token offerings, et cetera, for the new generation of innovators who are fundraising. Great to be here.
That's great. So we basically put together this panel from diverse people, right? We got somebody that's done an ICO, somebody that's invested and helped people raise equity markets, capital markets. Let's talk about this, where we see this is going, right? It started off, one of the first things, Mastercoin and Ethereum launching their crowd sale, and that was just a token generation event. It's funny that everybody has a different word, a TGE, ICO, STO. It's a lot of acronyms in this business, but what are you guys seeing as the future? You're doing an ICO and then a convertible debt, or what's your angle here?
So first of all, we call it a token generation event because we're a utility token. Initial coin offerings are not the term that we would use for what we do. So we did a token generation event where we sold our utility token outside of the United States. And when we were constantly approached by investors in the United States, especially also family offices that can't get involved in tokenized offerings quite yet, or private equity companies. So what we're doing now is that we've got assets under the hood, right? And the company's been heavily de-risked. We go out now to investors who would like to get involved in convertible debt and offer them an instrument to actually get involved in the company, either through convertible debt, which will convert into equity, or eventually get paid out with a very nice interest rate. Alternatively, to just get involved in the equity of the company through a valuation offering.
Jason, you're seeing from Indiegogo's side, people are more attracted to equity or tokens. Is this changing? Are you seeing the changes?
It's funny, we often laugh when Indiegogo was founded, it was done so with the vision of facilitating crowd-based investment in 2006. And when it went live in 2008, the founders quickly butted up against the laws, and they realized that they could not facilitate crowd-based investment. They invented, as a pivot, if you will, what we know today as crowdfunding. Over several years, until 2016, when we started to facilitate equity-based crowdfunding, we had issuers constantly coming to us, entrepreneurs, innovators, asking us, can we actually sell shares of our company to the crowd? Can we do debt offerings, et cetera? And the answer was constantly no, but you can do this innovative form of crowdfunding. In 2016, when we launched equity crowdfunding now with a registered broker-dealer, and the laws were now on the books to do this, we got into the business enthusiastically, and almost overnight, all of the issuers coming to us were starting to ask, can we do token sales on your platform? And we're like, man, we just gave you what you were asking for the last 10 years. I want to say that we now have both of these businesses, and they both benefit from having a broker-dealer and all of the compliance capabilities and the ability to amplify in hundreds of countries around the world. For the moment, I think it would be difficult to conclude that ICOs are not to use too many double negatives, but ICOs are extraordinarily popular right now. Obviously, the sum that can be raised, the projects that can be raised for, et cetera. But there's still a great interest in equity, and what we're finding is that they intermingle. There are, as is the case right here, there are companies that want to go in one direction and do a token sale followed by an equity sale. There are companies that want to approach this in the alternate direction. And oftentimes, the instrument that's being used takes advantage of both. It might be that we have a security token offering that's live right now, for example, where investors are getting a share of equity. Once that token is rolled and it's actually the digital asset is created on the blockchain, the equity will be converted to a digital asset. So it's really sort of tied together at this point.
Switching gears for a second, there's an obvious issue with ICO raises and security token raises and equity raises. They're in the management layer, in the governance models, and who does what with the money after the money is raised. And as you, Justin and Enzo, ICOs we've seen, if they are exit scams, it sucks. But even if it isn't an exit scam and the company is just not able to deliver the product, or they're going to spend all the money, the responsibility and the fiduciary responsibility lies within the three people that founded the company usually. Yesterday we talked about institutional investments. Is it the case that they're only going to look for equity investments because it's perceived as more safe, or?
Well, so for someone that is managing a fund, okay, so let's say I'm managing like a hedge fund or a actual pension fund, I can't just invest money, right? I have mandates. I have actually, I have certain type. I have a board. So they have to have tools that they can utilize, and I think that's where the kind of security token will fall into place. I do believe that there is a struggle with some of these companies and some of these groups raising so much money as an initial venture. As an initial venture raising $30 million or $100 million, that's a lot of money. And I think the lack of actual transparency is a big issue, and I think that's what the SEC is kind of concerned about, of course, and FINRA, because we have all of these rules and actually regulations like the actual Jobs Act that helps you to have some type of fair disclosure, and that's one of the challenges, I think, is I think that everybody wants to know what are you going to do with the actual capital, and it's broken down in the white paper, but as it starts to move forward, I think that they should be putting out a status report to their actual token holders and say, this is what's happening. We've hit this milestone, or we've missed this milestone.
Justin, do you think we should have milestone-based release of funds?
Well, I think certainly one of the things that we're likely to see in the future is more either rights that are given to the investor or more transparency that's given to the investor, or potentially more restrictions that are put on the founding team. And that's going to be a result of some of the learnings that the investment community gets from this initial wave of kind of token sales and ICOs that have been somewhat the Wild West. Frequently you see opportunities that have a really high beta and really high opportunity are also very high risk because the markets haven't become rational yet. And part of that rationality is putting in controls, putting in transparency. And hopefully much of that can be driven from inside of the industry itself as a series of best practices that many companies follow and that investors look to as ways to help determine the best projects and products. And that can be done in a way that limits the amount of outside force that's required to kind of protect the investors that are coming into the community.
No, just as a point of this, I think it's also that there needs to be more responsibility from the teams themselves to hold themselves accountable. One of the things I could say we did was that we said, we're not going to take our tokens, the team tokens, within the first year or even 18 months. We said there would be 3-year releases. every year at the beginning of the year, we would actually disclose to the community what products we would be building and to what level and stage. And every year, at the end of the year, when the token releases are due, we have to have a lawyer sign off, our general counsel sign off from a top 5 law firm, that those releases were actually met. So which is not easy to get a lawyer to do that. They're pretty stringent around that. And in this way, you can become transparent and hold yourself accountable, because after all, what the whole point of all of this is that you go out and you build the product for the market. And if you're not delivering on that, why should you be rewarded? So if you're late on the delivery, you'll be late to receive your tokens.
Yeah, there's been ideas like this, and Vitalik proposed some sort of oracle system where you would have people or trusted people in the industry which would release funds to depending on the milestone, and
Sure.
Somebody buys a Lambo, they don't get any
Right.
ever.
No Lambo buying.
I would just
Avoid
add,
Lambo.
I would add on this. I think that first of all, there's an interesting regulatory quality to this question. In the United States, where we're starting to see a movement towards treating a lot of these offerings as securities, I think that the various stakeholders who participate are starting to expect lockups and participate on that basis. And as that starts to become the standard, I think that the investors are going to impose certain requirements on the token seller as a precondition to participating. Outside of the United States, what I'm seeing anecdotally is that there's still basically little to no lockup on the part of those initial investors. They're participating 30 days, 60 days later, they're able to dump their tokens onto exchanges. One can debate whether or not this qualifies as like a rampant pump and dump experience that's still going on out of the United States, but that's happening. And at some point, one imagines that the bar is going to be raised, and that sort of Wild West quality will disappear. One other interesting point is, anecdotally, I've seen a couple of companies now, more than one, who are embarking on creating treasury services for ICOs that will basically come in and be the quote-unquote adults in the room, if you will, manage the money, communicate to investors, make sure things are run in a professional and prudent way.
Well, you know what, though, too, is that we're also seeing large banks like the JP Morgans of the world and that are looking at the kind of custody side. So there's a lot of custody, which can also tie into this type of lockup periods and so on and so forth, so that people actually know that the Bank of New York is sitting behind the actual kind of, is kind of watching over. So that might be something that's going to happen too. And unfortunately, though, what happens is that we start losing the decentralization concept when the big banks come in and start to centralize it all over again. So there's a little bit of this kind of debate as to what do you do then. I mean, outside of the US, you literally can go on Telegram and you can see companies, people saying, it's time to pump. Like, they actually use the word pump, which is pretty insane. But, I think that lockup periods are definitely happening where you have to hold the actual token for actually 6 months. The proof of stake model, if you get rid of the actual token or sell it or dump it, then in your note, right, you have some type of controls that doesn't allow them to really take advantage of the equity side. So you have to hold the token in order to convert the equity.
One of the biggest questions I have for a lot of the companies, when you're raising $30 to $40 million and you've got it in, why didn't you have a CFO or a CIO, a chief investment officer, looking after and maintaining the wealth of the company and growing it over time to achieve true capital efficiency and to protect the company? I just find that it's kind of flabbergasting sometimes, and I think that these are some of the practices that they should be interacting with, and they should just look. And it's not something alien. You don't need to create something new. Just look at how it's done already right now. And any company that has $30 to $50 million in a capital raise has a CFO and has a CIO. So just put these basic measures in place.
So something I guess I would want to raise on this just as a challenge to maybe the group and to the room here is I was thinking back to, and Mo, I've been going to your events for like 4 years now, maybe, give or take, and like I can't imagine sitting in a conversation 4 years ago, and I actually agree with what you said, where you would say we're going to improve a blockchain outcome by getting JP Morgan and BNY Mellon involved. It was like that was like it just would have never happened. And then I thought about that for a minute, and what I really thought about though is a lot of the promise of these decentralized technologies in a blockchain is that it creates opportunities for the kinds of people that don't have access to JP Morgan and don't have access to BNY Mellon. And so while I agree that those steps are critical as a way for us to help get over the hump and get to the next stage we get to, what I would challenge the entrepreneurs in this room to think about is how can we build in those same trust levels, that same confidence, so that an entrepreneur in Southeast Asia or in the Caribbean or in somewhere else that doesn't know how to talk to the lawyers that can get in touch with JP Morgan or whatever have those same creative opportunities that those of us in New York and Silicon Valley and Los Angeles have.
I agree, and I think that we should start looking at ways to, like if they build, the great thing about tokens is that you can actually write a smart contract that controls a lot of things without having someone having to oversee it. It oversees itself. So what I would kind of implore is the same idea. Build that infrastructure based on normal common sense, basically, and don't let these folks come in and try to organize it for us, because then we're right back to where we were.
And I think with this technology, it is possible to smart contract a lot of these things. A couple, like the two most popular questions on Telegram are when Moon and when Binance. And we could tackle the when Binance one first. There's, with tokens and security tokens, when they come on an exchange, and as exchanges become more and more centralized, that is like the peak is when you get listed on a major exchange and the price pumps. Are we going to see decentralized exchanges take over this? What are we going to do with the exchanges? Is this just a couple months where when you get listed on Binance it's worth something? Any thoughts on the when Binance?
I think that first of all, you don't just walk into Binance from day one. Okay, there has to be a strategy. And you have to have a rollout strategy of choosing small exchanges with smaller liquidity, a smaller pool. And if you're smart about it, it means that doesn't mean that you suddenly don't have less people to market to. It means you have more concentrated activity. Now think about how Facebook grew, right? Facebook grew by having incredibly strong concentrated activity. And when it was burgeoning, right, then you burst out into a larger market, and you burst out into a larger market, and you burst out in a larger market. Binance is a very big place. Yes, there's a lot of liquidity, but you can get lost in the noise there. So why not build in this kind of a way? And to sit and to listen to the community, and the community forcing you, because no one is really forcing you, to go on to Binance. How soon are you on Binance? How soon are you on these different exchanges? Is not the right way to look at it. You have to engineer every aspect of your company, including your trajectory, up onto the exchanges. And it has to be done responsibly.
I'm a actual kind of exchange guy, so I've been in the exchange business for most of my time, right? And the way I see it is that you'll have the ATSs in the U.S., and there's about 33 applications right now for actually ATSs with the SEC. They'll have a backlog for 2 years. It's very similar to what happened with the ECNs back in the day. And you also have these decentralized exchanges, and then you also have the centralized, the typical Binances. I think what's going to happen, though, I think is the great thing about it is that there's a lot of competition in the exchange environment, which will allow fees to be managed properly. Will also probably lower some of these kind of out of scope like listing fees that we're seeing. So I encourage a lot of activity. I encourage that we have more of these than less. And then I think most of us on the kind of ATS side are going to use the fixed protocol to actually route trades. So if I don't want to list XYZ token, which is a kind of security token, on my actual ATS, I can then route it out. And that's going to be better for best bid, best offer, best price, which will allow the institutions to now come in, because they are mandated to get the best execution. And without any kind of broker-dealer in the middle of it, they have to be able to prove that they got that. So I think you'll see that kind of, and then you'll also see platforms like BCT, which are now actually kind of consolidating 20 exchanges, 10 exchanges, and so on.
The ones that will be, and like BCT, the pool exchanges, pool liquidity, and the markets become more efficient. The second question, we got 5 minutes left. We still can talk about it. When Moon, and I guess from your guys' perspective, and Justin, being around so long, seeing the industry, do you think that what is more attractive to you? Is it an ICO? Is it a token? Is it a security token? Now, a security token event in New York. Does the offer of a security token mean that you're more likely to invest in that, or obviously if there's more regulation, it's maybe a safer investor, but do you think that the security token economy will unlock this $1 trillion of capital markets and all these things?
I mean, from our perspective, we've driven a lot of the recent roadmap and direction of the company on the assumption that this is going to be a very large market. I think that if you look at the opportunity that security tokens have, if done right, they have advantages for both sides of the marketplace. From the seller's perspective or the issuer's perspective, today, if we live in the United States or Western Europe, we have access to lots of different investment opportunities. If I live anywhere else in the world, I don't have access to those markets to buy and sell. So there's giant pools of capital out there that are effectively untapped that have the opportunity to invest in what you're doing on using security tokens or things like that. On the other side, from the seller side, it can take what had been a traditionally less liquid security and make it more liquid and therefore lower risk for the investor. And so, this is one of the few times I've really seen something come up that has such clear benefit for both sides that I think it almost has to happen.
It does seem like the next wave in the industry. What do security tokens and what does that do to the price of anything?
I can't tell you that.
Makes it more accurate.
Yeah, it should be fair market.
When you're talking about the potential for global liquidity, we're talking about the largest possible ecosystem for value appraisal. So until we achieve that, one assumes that we're not actually seeing a fair reflection of the price of assets that are not digitized. The one thing I would love to add on both when Binance and when Moon is I think it ties into security tokens. I think the one thing that's often missing from today, and certainly that's been the case in the past, the one thing that's been missing from the conversation about liquidity is value creation. There's like this expectation that you're going to invest in early days and 30 days later you're going to dump and achieve all of this liquidity, and getting listed on exchanges factors into the marketing materials for token sellers, et cetera. But I don't think that's going to be, that paradigm is going to last a whole lot longer. I think we're going to start to see a maturation of the market where investors are expecting to see a company actually deliver some value. Those trading on secondary markets are going to start to expect to see announcements before they're willing to start trading this stuff in real numbers.
There's two things that drive price, ultimately, currently. And this is exactly what I agree with you 100%. Currently, there's two things that really drive the price, and it is liquidity, so how many exchanges you're on and what your growth plan is to different exchanges. And then there's product announcements or just announcements in general, right? But both of these are sentiment related. We need to move to a situation which is less qualitative and more quantitative. And when we start seeing the companies producing the products, producing revenues, producing a user adoption and user usage, these are quantitative. And these will truly drive the sentiment of the market and the valuation of the company and the valuation of the tokens, either as utility or as security.
I think that rings more true for security tokens. The case for many utility tokens is if you were ever going to be a user of the product,
Right.
the actual amount of tokens necessary to use the product are much lower than what anybody would have if they're trading and investing in it.
In some cases only.
Well,
Only
you
in
know what,
some cases.
I think, so we have to think about the kind of utility token is definitely a fundamental shift in business, right? You don't own, you'll never sell your kind of your blockchain. It never gets sold. You're a company that sits outside of it. And now there's a lot of nonprofit structures in there, and then they have a venture and that invests in that one company. But as the foundation of that token, you should be willing to invest in your competition, right? So if you created this token to help you, you're supposed to be able to use that foundation of the token to that if somebody wants to use the same token to build a similar type of company or do something with it, you should be helping them too. And I think that's the fundamental shift that a lot of the investors do not understand at all. Yeah. So we continuously like educate. This is the difference. And on the kind of security token side, yeah, it's the fundamentals, it's the financials, and in some cases you don't even have to tokenize a Reg D. I mean, you could just do a Reg D and do a crowd offering. I mean, you don't really need to tokenize it. So I do believe that the kind of security token could be utilized with a smart contract to do things like filings, like the XBRL type of stuff, which is more for the kind of public equity markets. But I think that's a little bit farther down the line.
Please give a big hand of applause for this panel.
Thank you.
Thank you so much.